Money Morning Live. It's time that we get things started right here with Tom Gentile. It's day 3 of the quantum trading special. Plus, we have some special things in store for you today. We'll get you involved and more in the know in 5, 4, 3, 2.
Hey everybody, Tom Gentile, welcome back. So this week we've been focusing on trend trading and something I like to call quantum scripts. And today is part 3 of a 3-part live series on just that, rules-based trend trading strategy. So we're going to do a quick review of the past couple days. We're going to add on some more scripts. Those 5 stocks I showed you yesterday, I've narrowed it down to 1. In fact, I've got to take the runner up because the one I was looking at made a big monster move in the right direction. So I've got plan B, and plan B is up and ready to go. So get your notepad out. We got a lot to cover, guys. Eric, what's going on with you today? You got something for my group?
I do have something for your group. And I mean, there's probably a lot of people that are here right now during your show that weren't here earlier in the day. But across Money Morning Live, literally every service is offering 2 months free if they purchase a year of the service. That means all of your services as well, Tom, including Quantum, which we're going to be focusing on today, Surge Strike that we focused on a bit yesterday. All of them are going to be 2 months free. So you're getting 14 months for the price of 12. It's a solid deal. Keep that in mind when Tom goes through the day 3 of the Quantum special today. How you doing, Tom?
Nice. Really good here. I keep watching this market and it just keeps telling me, hit the bid. This isn't over yet. And Quantum has been calling the bear market for quite some time now. So let's get into some key points. Chart on the screen. This is where I want to start. So we were talking about trend trading and rules-based, and we talked about a very simple strategy that my mentor had taught me back in the 90s. I mean, you got to go back all the way back to the 90s. And so we looked at just looking at simple moving average crossovers. Now, believe it or not, some of you I got to tell you this, believe it or not, there were more than just moving averages to look at back in the 90s. All right. There were almost as many strategies. There were almost as many indicators. And so, many of them really kind of tune into price or volume. Moving averages is a price indicator. And so, my mentor used to always tell me, he said, sometimes some of the best stuff to follow out there is the simplest. And so this is a simple strategy using a simple moving average, 2 of them actually. So we discussed this. So we talked about how if you look at, for instance, when a 10 period crosses over a 30 period, that's a bullish signal. When the 10 period crosses below the 30, it's a bullish, bearish, etc. Works on some stocks better than others. We discussed that. We talked about alpha stocks, where this works on stocks that are moving at or faster than the movement of the S&P. That's called the stock's beta. So we talked about that. We also talked about narrowing the list down because I started with 65 stocks on Monday. We trimmed that down to 27 yesterday, and by yesterday's close, all right, just a half an hour later, we had trimmed that down once again to the top 5. I want to show you a little bit more of how we took that 27 and trimmed it down to the top 5. Now, if you remember, we were talking about moving average crossovers. We were talking about, can we improve on the crossover system? And I talked about the crossover system, how I first started looking at it and back testing it using Google, because Google was definitely a stock that moved around a lot. It was what we called an alpha stock, all right, constantly moving more than the S&P 500 or the NASDAQ. And so we put together a very simple strategy that was enter when the 10 crosses above the 30, exit when the 10 crosses below the 30. And then we also had a short trade set up where we had an entry when the 10 crossed below the 30 and an exit when it crossed back above. So all of this together, applying it to Google over a 10-year back test, we were getting, and this is how you know it works, because I said yesterday, you're never in cash. So you go from long to short to long to short. That's when it crosses up, crosses down, crosses up, crosses down. You're not going to see profits all the time. But this was a really good start. And we're like, all right, this looks pretty good. Let's look at the results. And the results on the crossover system, I call it 1.0, we had 50, a little less than 52% winners. So 52 to 40, this says 46.84, but that meant that there was one outstanding trade, which is why these don't add up to 100. You had 41 losers, 37, or 41 winners, 37 losers. But this is the number I'm most interested in, the average trade profit. That's when you take the profits and losses and combine them together. This was on the stocks, by the way, folks, not the options. So when we're trading, when I'm first testing out a directional trading strategy, I use the stocks. Because if you can't make money on the stock, why go into options? All right. I have a quote. I don't come up with many of them, but this is one I came up with decades ago. And it goes like this. If you can't make money in the stock market on a stock, then trading options is going to only allow you to lose money slower. That's it. That's my quote. So we want to make sure that as directional traders that we see something that's a pattern that works over and over again before we implement options. So we're not even there yet. All right. So some things we can do. How about adding in stop losses? This is what a good system trader does. They go and back test and they start looking at, all right, what if I put a stop loss in? Can I make this number right here? This is the one I'm interested in. The average trade profit. Can I make that go up without affecting too much of anything else? All right. So what we did was we went back to the drawing board and we added a 10% stop loss in. And you know what happened? Nothing, except that the average trade profit actually went up a little bit. Not much, but a little bit. Now, what happens when we add quantum scripts in? Now, quantum scripts allows us to put a noise filter in. I talked about that yesterday too. A noise filter basically takes out the chop. What we're looking to do is increase what? Profits, and maybe even at the same time, decrease our amount of signals that we're getting, okay? Now, I'm going to come back to this in just a moment because I want to jump over to the 27. Now, what the 27 did was it allowed us to look at, everything from, we were looking at kind of drawing down on the number of trades we had. We went from 65 to 27. I updated that and I looked at today's list. Today's list went to 46 and 46 because, again, the market's still rolling over. This is an interesting one I saw too. Let me show you this. Eric, for the first time in a while, I saw the SPY on this screen.
How far down is it, Tom?
SPY. Well, here's the SPY, the spider of growth. There's the SPY. Take a look at that. Now, I mean, when you get an S&P, you get a market that starts to roll over. When you see, for instance, take a look at here. You can I'm going to dial right in. There's your crossover sell, buy, immediately sell, buy, and look here. Got a sell signal today on lower highs and lower lows. And so that's really interesting to me that this is actually now becoming part of the overall market. When you start to see the S&P, the QQQ, the Dow Jones starting to roll over too, it just tells us that we're on the right side of the trend. So the trend has been falling. So moving forward, what did we do? We took, right now, I want to say, I dare to say 40% of stocks, of the stocks in the S&P 500 have made this crossover move here in the last week to 2 weeks, right? We saw 65 go to 27. And how did 27 get to 5? By going in and back testing and creating the back tests and continuing to draw down, filter down. And now where 4 becomes 14. Now, how do we go from 52% to the numbers that we're seeing now? 82% last 5 years on the bullish side, 71% last 5 years on the bearish side. Well, that's where we go in and we back test, where we go in and we take a look at 1 year, 3 year, 5 year back tests, and we're able to actually drill in on the stocks that are doing it now, that have been doing it for the last year, been doing it for the last 3 years, the last 5 years. And so there's a lot of scripts we run to get to the 5, that you see here, those top 5 bearish quantum stocks going into today. All right, let's take a look at each of these. And so what I want to do is I'm going to bring these up on the board, and we're gonna rotate back and forth a little bit here, folks. So popping back up, I'm gonna go to charts. I'm gonna go to stock charts, and I'm gonna bring a stock chart up. And let's start with Chewy, since it came up on the screen right now. So here is Chewy, and we're going to look at. I want to actually look at Chewy, and I want to look at it a little bit differently. We'll throw the moving average signals up there, even though that this is just the beginning part, but does give you an idea of what we're looking at right now. So here's the stock. I'm going to bring this down to the last 30 days because, again, that's really what we're interested in here, is what's happening right now. So what's happening right now with Chewy is the signal came 2 days ago. The signal came at 38. We're at 34.21. This train left the station, and it really did it after earnings, right? The earnings report came out, and it wasn't as good as people expected. And of course, now we're trading down here near 34. So this one's gone. By the way, folks, this was the one that I was interested in sharing with all of you here, that are watching this. That of the 65 that became 27, that became 5, I was all set up to share this, and I said I need one more day. And unfortunately, the one more day, it really jumped. I mean, we're talking about something that's down close to 10% today. So it's not going to be Chewy's, because I don't chase something that moves that fast. In fact, you know what we do, Eric, if we're in a trade like this and we get a big gap, we get a double-digit gap down?
What do you do,
What do
Tom?
you think we're doing?
I'm not sure what you're doing, if you want me to be honest. What are you doing?
Well, if you're in something and all of a sudden one day you wake up and you've got a big move in your direction, don't you think maybe you might want to take some of it off?
Take some profits.
See, today was a day to take some profits on Chewy, not to go jumping in and running after that train and trying to jump on the caboose. We don't want to caboose this one. So, but we got 4 more. Let's take a look at the other 4. And so I want to look at MAN. So let's take a look at MAN next and see what's going on with it. MAN. Now, this is where we'll go in, my team and I, and we look at these and we start to look at them for past signals, and we start to look at them for more than just like I said, this is only the first 2 lines of code. We start looking, but this is trunked down more so than what you see on the screen. So if I take this 30-day on MAN and let's make that 100, let's go back and see what's happened the last 100 days. All right, so it is moving in the right direction. It does have that move to the downside, consolidation. Now it's tapping on the bear market's door. This one could potentially move lower. This one has actually had some really good moves in the past. Moves in the past in terms of directional moves once it breaks out. So you can kind of see here, you had a buy signal, sell signal, buy signal, sell signal, and then the sell signal really kind of opened up as we went from 90 down into 75. That's a huge move. That's a triple-digit move in the option world, by the way, guys. Then got a little buy, sell, buy. By the way, these aren't buy signals, all right? These are buy signals on what you see on the screen. But when Quantum Scripts gets a hold of this particular chart, it's only taking the sell signals because we have scripted in the noise filter. The noise filter takes out the chop, and the chop in this stock is the buy chop, not the sell chop. So Manpower does look like a good one. Is it the best one, however? I think there's more that we can find out. So let's move to our next stock. All right, Shutterstock, SSTX. So let's type in SSTX. Everyone here should know what Shutterstock does. Shutterstock, SSTX. Why am I not? Did I? SSTK. My bad. SSTK. There we go. So that's going to definitely bring up some options for us and some charts. Okay, SSTK, same thing. That big move down. This was a nice move to the downside. Made a lot of money on that sell that occurred back in April. But since then, it's been a little bit of a chop. But guess what? It's really, again, we're eliminating or more importantly, quantum scripts, with this particular chart eliminates the buys. So it's only showing you the sells. Here's a sell happening right now. This one I think doesn't look as promising, Eric, because we still have some support here at around 52, and then again at 50, and it's trading around 55. Now, we could definitely, between 55 and 50, that's 10% on the stock. We could definitely find a really good option trade on this one. But I want to hold because I want to look at the other two. All right, so we've looked at 3 stocks so far. Let's take a look at the other 2, and I'm going to start from the bottom. We looked at Chewy, Head J, okay? Head J, HEDJ. Now, this is not a stock. This is the Wisdom Tree Hedge to Equity ETF. And you can see here that it too has the downtrend. That's great. All right, so we're seeing the moves are made on the sell side. Now, again, we just flipped over and had a sell. This looks pretty good because it is definitely accelerating off of what happened last week. New lows today over the last month to 2 months. But then you go, about the last month. But look at where we got the hurdle through. We got a hurdle through 64 and 65. Stocks trading at 66.45. Not a lot of room there before we start to hit support. So maybe there's something better, which brings me to WHR, Whirlpool. All right, so Whirlpool has been agitating lower, no pun intended. As you can see here, we've had a little buy signal that didn't really do anything, but the sell signal took the stock from 175 down to below 150 before having a rebound. Again, what quantum does is it goes through and it eliminates the noise. So what you're seeing is just the first 2 lines. Once we add that in, this all changes. But it did push a sell signal yesterday, and we are below that level on the sell signal. So guess what, Eric? All 5 of these were good opportunities, right? So if I can put them back on the screen for everybody. Yesterday, we looked at MAN, we looked at SSTK, we looked at Whirlpool, we looked at the Hedge to Equity Wisdom Tree Fund and Chewy's. And of the 5, I liked Chewy's because it had the highest beta, had a nice profit potential. It also had 5 trades. 5 past trades in the last year. These are all drilled down to the last year. We go from 10 to 5 to 3 to 1. And the 1 year, the one thing I liked about the top 4 was that they all had 100% winners. Okay. MAN also had a 5 as well. So MAN looks like a good trade. But when you look at something which is called, when we're looking for, what is it? When you take the bid and ask and you narrow them together, we're looking for efficiency. We're looking for something that has the least amount of slippage. Guess what? Whirlpool comes up as one of the best. So I want to take a closer look at Whirlpool. So as we know, Whirlpool stock we've had that slide down. We've had that equilibrium point, which was right here around 165. That crushed through last week, and then we're getting continued red candles coming out of this one. This looks like a much easier move. I don't need 10% on Whirlpool. I don't even need 5% on Whirlpool. You know what I need? About 3% on Whirlpool to get again, that percentage to double. With the ability to trade spreads on this gives us that opportunity. Let me add one more piece to the overlay. Let's go ahead and put the implied volatility up on this one. And you can see, let me put let's turn off the signals. Let's just go straight to the stock. And now we're going to see the stock with the IV. All right, so option premiums were high back in April. They were also high in August. They've come down. They're not the cheapest they've ever been, but it does set up for a really nice, slightly out of the money put spread. So I go to the option tables. This is the next thing we do. We look at those option tables. Now, what did I say yesterday about bear markets? I said that bear markets, the bear takes the elevator, the bull takes the stairs. That means I'm looking at 30 days or less on bear moves. Right now, about 2.5 weeks to go to get to September 16th. September 16th I picked, which only has 16 days to expiration, because the difference between the bid and the offer, when you look at the 16th versus the 30, is about half. You got about half the distance between what the options are bidding for and what the options ask is. So I want to narrow those down. It just gives me better efficiency. Plus, the gamma is going to be higher on these options, which basically means we're likely to, because of the drop in time, we're likely to get to our destination faster, which means that those options will mature faster if the move happens. Now let's look down here, and I'll show you what I'm looking at with Whirlpool. The 155 puts right now are the ones that have the highest open interest. Right? I don't have any volume on these today because I snapshotted this earlier. But as you can see, I'm looking at potentially the 155 and the 150 put. Right now, the 155 puts for September 16th. Well, when I last looked at them, they were trading at 365. And the 150 puts were trading at 205. Let me update that, and let's try to get something that's as close as possible, because I was looking at this at 10 o'clock this morning. Here we go. Here's some that are occurring right after 12. Let's see what's going on with them now. Oh, well, the Whirlpool's actually going in that direction, because the 155 puts are now trading at 390 by 420. So they're up a bit. Take a look at the 150 puts. They're up too. So if I buy a higher strike put and I sell a lower strike put, that is a bearish position. So putting this is a bearish position. What I want to do is now look at the risk graph. What's this going to look like when I put the whole trade together? So when I put the whole trade together, right now it's showing a trade entry of $170. That's if you could split right down the middle, right? I believe we could probably get this one off at around 180, but I would do it for $2 or less. All right, what am I looking at doing for $2 or less? Again, I'm going to put the trade up here for everybody, and then I'm going to show you how to place the order. What we're looking at doing is buying the Whirlpool September 16th 155 puts and selling the September 16th 150 puts, right? I'm going to look to do this for $2 or less. This is going to be a day-only order, which means once I put it in, if I don't get filled by the end of the day, then I'm going to cancel the order, okay? So how do I put this together? Oh, this is simple. I'm going to go on over to Street Smart Edge, and I've got my Whirlpool all set up, ready to roll. Look at that. I feel like Julia Childs, the turkey. I put the turkey in, and here's one that's already done. So I've already got it set up to go. So what I'm looking at right now is that the 155, 150, well, it looks like they're 140 by 175. This is better. This is back to where we were this morning. Perfect. So if I were looking at trying to get into this at $1.75 or better, this is how I would do this. All right. I'm actually going to go in and I can create a walk limit debit order. Now, you have to check and see if your broker allows you to do this. But what this does is this allows me to go in and place an order. And if it doesn't get filled, I can cancel and replace for a little bit higher price, etc. So I'm going to do that. I'm going to customize this order. And I'm going to set it up where we're going to start at around the 160. I'm going to start at 155. Right? I want to try to get this off at $1.55. But I'm willing to pay as much as, and this is the end price, $1.75. I'm going to put this in 2-cent increments. I'll let it go at 2 seconds. So every 2 seconds, if it doesn't get filled, okay, we'll make it 3. Every 3 seconds, if it doesn't get filled, then it's going to replace that order. All right, is everybody ready? Here we go. I'm going to preview the trade. Now I'm doing 10 lots in my own account. So this is what it's going to end up costing if I get filled at $1.75. Let's go. Let's see what happens. Here we go, Eric. And they're off. And I'm going to see if this gets filled. So we're going to watch this for a few moments. Now, once this is filled, if it's filled, then I'm going to look to take half of it back at a 100% profit. All right. So again, 155 by 175. There we go. Filled. Eric, what did I get filled at?
You got filled at $2.15 or $3.80.
I bought at $3.80. I sold it $2.15. So I got filled at $1.65. That's where I got filled. How cool is that? Because what I did was I let my account work the order. So what it did was it said 155. Any takers? No. 150. And it went to 158, and then 162 and 160. So 165. It ended up getting filled. So That's pretty cool. So what do I do now? I sell half of this at a double is what I'm looking to do. Now, folks, this is not a recommendation. This is a case study that I'm showing you that we do here, with this particular strategy. Again, if I could just summarize everything for just a moment or two, let's talk about where we were and what we did. I talked about a rules-based trend trading system. I then showed you the bearish side of the system because that's where all the signals are coming from. That's where they've been coming from over the last week. I showed you on Monday a list of 65 stocks that we looked at based on the first two lines of code of that strategy. We then started adding quantum scripts. With the noise filter, we cut out half immediately. And with the back testing feature that we do, where we go through and look at applying it at just the right stocks, and of those stocks, which ones are working right now? Show me the money is what I say when I go in and do the back test. That took us down to 5 stocks. And guess what? The one I wanted to do, which was Chewy's, already on the move. Can't do that. So I looked at the B team. Since the varsity already went and took off, the B team was looking at Whirlpool. So the Whirlpool vertical debit spread is a way of getting into this position and getting into it on a bearish way. I didn't have to short the stock. The stock's trading at a ridiculous price right now, somewhere around 155, 156. 156. I don't want to sell a short stock for $156. What I did was I created a bearish position where I could have bought the 155 puts and paid 380 for them. But I went ahead and cut my risk by 2/3 by simply doing what? Financing the 380 that puts I bought for 380 by selling an equal number of them downstream and taking in $2.15. So, Eric, that's what we did. That's what we did. And so my plan with this one is if things go right, I'll sell half at 100%. And I believe that it looks like about 200% is where it could go to get to the other. Well, no, not 200%, excuse me. Around 150% is where I'm going to sell the other half at. All right. And what if it goes against me? What if I'm wrong? Because you have to ask that question. That's the first question you should be asking. What if I'm wrong? All right, well, what if I'm wrong? If I sold this for $1.65, I could keep, and what I'll do is I'll keep a mental stop where I could get out of this if it drops in half. If this thing goes down to around that 80 cents, 85 cent for the spread, then maybe I am wrong. Maybe I need to get out and I need to take my 85 cent loss. Right? So that's how I put everything together. Right? So, guys, part 1, how to create a trading strategy. How do we do it? How I create a trend trading strategy. Part 2, how to take a bunch of trades you have on that and start whittling through them. What we did was we started taking out by adding in filters using quantum scripts. We went from 65 to 5. Took those top 5 bearish stocks, found one that we like that had a great option trade on, and I showed you step 3, which was plan the order, execute the order, manage the order. And so there you go, folks. So I am going to be back here again. Well, gosh, I got so much going on today. I do have microcurrency traders. Those of you that are part of our microcurrency group, I'm going to be live at 1 o'clock. We're going to talk about the new coin that I got coming out. All right. Going to be coming out really, really, really soon here. We got one that hit our parameters today. But for those of you that are with me, you want to be part of Quantum Scripts. Like Eric said, we are running a special deal for everyone. The markets have been murder. And so we're going to help you out with that by giving you 2 months free when you sign up for a year of our services. You know what I do. So if you want to take advantage of 14 months for 12, then contact Gabe and he will tell you how to get that done. All right. Okay. I'll see all of you back that are microcurrency traders, my members. We'll see you in 30 minutes. For those of you, happy Labor Day weekend to you. I'll be the first to say it. I will not be here Monday, but I'll be back again Tuesday. And we're going to get in hot and heavy in the microcurrency space because I got a feeling we're going to see a lot of activity in September. We'll tell you about that next week. Bye, everyone.